Hi, everybody. This is Hunter Satterfield, one of the partners here at Kane Waters and Associates, as well as the Chief Investment Officer. I hope everybody had a wonderful and happy Thanksgiving. We're here today in front of you to talk through the November market update. As always, I am joined by my fellow partner here at Kane Waters, Brian Bortz. He is also the head of our CWA Investment Committee. And then also Brad Sanders, the Managing Director of Tectonic Advisors. Thanks, gentlemen, for joining me. Before we get to that, let's talk about the numbers. For the month of November, the S&P 500 was up 9.1%. That's for the month, not for the year. Global stocks were up 9.2%. Domestic bonds up 4.5%, and global bonds up 5%. So, Brad, as always, I'd love to come to you to start. Obviously, those moves, both in the equity markets and the fixed income markets, are more like annual moves. And so, kind of what you want to talk a little bit about what happened to drive both markets higher that much in the month?
Yeah, you guys both have teenagers, so I've been trying to sit here and think of an analogy that, like when you catch your teenagers lying and they know they're lying and you know they're lying, but there's a part of you that's like, maybe I'll just act like I believe them just because it'll be better for everybody and I don't want to deal with this right now. That's what the market was like in October. So we kind of have we're in this like very calm period between interest rates like actually starting to affect the economy. And so good news and bad news are both good news for stocks right now. If you have faster growth, that's great for stocks. If you have declining metrics like inflation and everything, that makes everything go up. And what we had this month was you finally started to see inflation numbers go the good way for inflation, meaning down. And a lot of the components for that were going down. And so everybody took the ball and ran, meaning, oh, well, inflation's going down, so the Fed's going to cut rates. Well, the, if we really sit back and think about that, the Fed's already told us the only way they're going to cut rates anytime soon is if it's an emergency, like the economy's bad. So you can't have both things. We can't have our cake and eat it too. So this was awesome for the end of the year. Like we're all investors too. So like let's not look a gift horse in the mouth. We want to be excited about these kind of things. But I also don't I would just want to caution everybody to not get too far out on our skis here because I don't think this was the start of a new bull market or anything crazy like some of the stuff I've been hearing. I think we all need to be uh, cautiously optimistic about the market going into next year and to take this as a win, but not go crazy. I guess is what I'm saying.
Yeah, no, that's helpful. And Brian, we've actually been talking about thematically all year. We've been talking about those things that Brad just referenced related to volatility. And I think oftentimes us as investors, we think volatility is only on the downside, but we can also see it on the upside, which is what we saw in the month of November. I mean, we obviously are talking at the investment committee level about continued volatility and whether that will persist. You want to talk a little bit about, kind of where we see that, here over the next, call it 12 to 18 months in light of some of the broader things going on, both geopolitically and the economy?
Sure. Thanks, Hunter. You're exactly right. The theme of our presentations in this investment update for the last 12 to 18 months has been volatility. You could summarize it down to one word, it's volatility. And while I don't think that that's going to necessarily go away, I do think what we're going to start to see is a divergence here between the economic data that comes out and what the stock market does as a reaction to that economic data. I think investors need to remember that those two things are very different. The market and the economy are different things. You're going to have a Fed take action and has taken action to lower inflation, and it's working well, but it's not over. And there's going to be bumps along the way, and the Fed has no inclination at all to lower rates yet. In fact, they still have a coin flip 50-50 chance that they may raise rates at some point again. So the market's not ready for that. But what we saw in November was silly. I mean, to have a 9, almost 10% increase in a month, given where the market valuation is, doesn't make a lot of sense from a market standpoint. You have really, really high PE ratios at the top of the S&P 500. You have a chance that the S&P as an index could come down, but everybody make money because the other 493 stocks are going to do well. You have all these different opportunities for next year. And what I've been telling my clients is I think that next year is going to be a good year in the stock market, but I also believe that that's only going to happen once the economy kind of gets everything settled down and in order. Just remember, there's a difference between the stock market and the economy.
Yeah, that's helpful. And I think for all of us, both the three of us, and then also our listeners, as we turn over into 2024, we've got a lot on the horizon, right? We have elections coming. We have continued Fed, activity, and I think oftentimes that can create a little bit of concern for us as far as what do we do with our financial plans, and what we talked about this time last year on this very recording was talking through continuing to invest and believing in the long-term success of the markets. And that obviously was positive and beneficial for many of you that invested ongoing this year. And that would be our encouragement to all of you for your financial plans to find success is to continue to invest, get your money invested and going, and don't worry about the noise that's out there. Let us deal with that for you at the investment committee level. So here, as we approach the end of the year, obviously we wish you all a very happy holiday. We hope you are safe. You have a great end of the year, and we will be back in front of you at the beginning of January with a full update for the end of 2023. Thank you so much and happy holidays.